Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 16th, 2025, and we're diving into Powerfleet's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Powerfleet has had an impressive year, and I'm excited to break down their financial performance and strategic initiatives with you.
Revenue and profitability overview. Let's start with the top line. Powerfleet reported a total revenue of $362.5 million for fiscal year 2025, marking a 26% increase year over year. John, what are the key drivers behind this growth?
Powerfleet's revenue growth is largely driven by their strategic shift towards a subscription-first business model, with approximately 75% of their revenue coming from high-margin, recurring SaaS services. This pivot has not only increased their revenue, but also significantly boosted their adjusted EBITDA by 65% to $71 million, with margins expanding to 20%.
That's impressive. How did their Q4 performance contribute to these results?
In Q4, Powerfleet's revenue grew by 42% year over year to $103.6 million, with service revenue increasing by 49%. This strong quarterly performance underscores their successful integration of acquisitions and organic growth in key areas like AI video solutions.
EPS forecast and actual results. Analysts had forecasted an EPS of -2 cents for Powerfleet, but the company reported an adjusted EPS of 2 cents. John, what does this tell us about Powerfleet's financial health?
This is a significant beat against the forecast. The positive adjusted EPS of 2 cents compared to the expected loss highlights Powerfleet's effective cost management and operational efficiencies. It reflects their ability to integrate acquisitions successfully and leverage synergies to improve profitability.
How does this performance align with their strategic goals?
It aligns very well. Powerfleet's focus on high-margin SaaS revenue and operational scale has clearly paid off, allowing them to exceed expectations and set a strong foundation for future growth.
Strategic initiatives and market position. Powerfleet has been aggressive with its strategic initiatives. Can you elaborate on their market position and growth strategies?
Absolutely. Powerfleet has expanded its subscriber base fourfold to 2.8 million, positioning itself among the top 3 global AIoT SaaS providers. Their customer base has grown to 48,000, including over half of the Fortune 500 companies. This expansion is driven by their focus on AI video and in-warehouse safety solutions, which grew by 20% and 17% respectively.
What does this mean for their competitive edge?
These strategic moves enhance Powerfleet's competitive edge by broadening their market reach and deepening customer relationships, particularly in high-value sectors like logistics and industrials.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and future outlook. How has Powerfleet managed its costs, and what are their prospects for the coming year?
Powerfleet achieved $16 million in annualized cost synergies, with $11 million contributing to their adjusted EBITDA. Their international operations grew by 13% year over year, showcasing their global resilience. Looking ahead, Powerfleet is confident in expanding their growth in FY 2026, particularly in the second half, supported by a robust pipeline and strategic focus on high-quality revenue streams.
What about their financial position?
They ended the quarter with a net debt of $225 million, which is better than their guidance. This financial discipline, combined with their strategic initiatives, positions them well for future growth.
Key takeaways. In summary, Powerfleet has delivered a strong performance in FY 2025 with significant revenue growth and a positive EPS surprise. Their strategic initiatives and operational efficiencies have set a solid foundation for future growth. John, any final thoughts?
Powerfleet's transformation into a leading AIoT SaaS provider is impressive. Their focus on high-margin recurring revenue and strategic acquisitions has paid off, and they are well-positioned for continued success in FY 2026.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Powerfleet's performance in the comments below.